How much cash should you have in this environment? I have personally 0% of my portfolio in cash. I don't like to have any cash, and in this video I will explain why. Some people are asking, yes, this is a market decline. Maybe you want some cash so you can buy when you see some deals over there. Maybe you hold some cash because you expect the market to go down more than this, like it can go down 10%, 20%, 30%, like we had in 2022. And maybe you want to wait a little bit before you see crazy deals so you can buy things on the cheap. Yes, that's the reasoning for holding some cash, but nobody knows if this market decline will continue like in 2022, or maybe this market decline may stop at minus 10%, minus 15%, like we had in 2015, 2016, and this market can stabilize all year long. Nobody knows what kind of recovery we will get. So now companies are fine, earnings are fine, we have a lot of uncertainties. This is just emotions, and people are panicking in the short term. The market is a little bit expensive, so I wouldn't be surprised if it drops more. Maybe you want to hold 0% cash. Maybe you want to hold 15% cash, maybe 20%. I wouldn't recommend to have more than 20% of your portfolio in cash because it will be a huge drag. And even now at the moment, I see some deals over there. So I don't recommend to have like 40% of your portfolio in cash. I think that's the waste of your resource. If you think that something is cheap, if you like a company, if you like the prospects of this business for the future 5 years, you can buy right now. There is no need in forecasting. If you try to forecast what will happen in the short term, you will fall into the trap of thinking about the macro, and it will lead you to a lot of stress, and nobody can predict the macro, what will happen in the next months or 2 months. If you want to believe in the macro, let me take this simple example. In 2020, we had the latest virus outbreak pandemic that completely stopped the world. A lot of companies went bankrupt. You had earnings going down, revenue going down. The whole world went bankrupt. If you had this information beforehand at the beginning of 2020, it's very likely that you would have sold your stocks. If I tell you, at January 1st, 2020, there will be a pandemic, we don't know when it will end, and it will be completely massive. You will stay at your home for so many weeks, you will not remember that we are in a normal year. This is very special. The government will all stop. This is very scary, a scary situation, and still the markets in 2020 went up. So I don't see the point of forecasting the future. Macro and micro can be different sometimes. The macro, the real world environment can be different from the stock market. Don't forget that the stock market is about predictions in the future. People are anticipating what will happen in the next 6 months or 1 year. So I don't have any cash right now. Everything is invested. If the market goes down, maybe I will sell some stocks to buy other stocks that I think are cheaper. But for the moment, I don't plan to do anything. And I want to show you something. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. I want to show you something from Fundstrat, from Tom Lee. You may be familiar with this name, Tom Lee, that often comes to CNBC or other podcasts. He has great views about the market, great analysis, and he recently shared this table. Okay, what can you see in this table? You see the S&P 500 top 10 daily percentage returns. You see in 2023 the best days of the market, when the market went up like 2% and 1.6%. That's the top 10 days. And in 2024, again, here are the top 10 days of the market, plus 2%, plus 1%. Okay. The cumulative gain of these top 10 days in 2023 accounted for 20% of the total performance of the S&P 500. Just so you know, in 2023, the S&P 500 went up by 24%. out of this 24% increase, 20% was made during 10 days. If you had missed these 10 days, you would only have 4% performance. You would have underperformed almost everybody. Similarly to 2024, the top 10 days accounted for 19% gains. And let me remind you that in 2024, the S&P 500 had a performance of 23%. So if you missed these 10 days because you tried to time the market for some reason, you would have had only 4% large underperformance. And this is, frankly speaking, the reason why I have zero cash, because I don't want to miss out on the great rebounds. Now the markets are going down. Maybe for some reason, tomorrow, the stocks will go up by 2%. My portfolio may go up by 2.5%, and it will completely lift my performance. And I don't want to miss these days. I don't want to miss these top 10 greatest days of the year. Because if you miss these top 10 days, you will have a very bad performance. You will underperform, you will have, and you will stress about it. You will feel anxiety if you happen to miss out these days. And I can show you other charts about if you had missed the top 10 days of the past years for 2022, 2021, 2020. They all say the same things. They say that if you miss the 10 best days, you miss out of all the gains. And the conclusion of this one is there is no point in timing the market. If you try to time the market, you will maybe protect your capital because you have some cash in the market. So you will not experience large drawdowns, but you will not experience large moves up because you need time to deploy your capital. So maybe one question to ask for the amount of cash you have in the stock market is, do you really think you can avoid the down days while benefiting from the up days? Do you really think that you want to take the risk of missing out of these top 10 days? I know my style, I know I'm not good at market timing, so I will just stay invested, believe in the process, and that will be it. I don't want to miss out of these gains. I'm not a trader, I just want to buy once and then sleep. So that's basically it. You do the analysis, the research, you buy, and then you let them grow in the future. If you think you have the courage and the guts and I don't know, if you have maybe how you have a crystal ball, in this case, you can try to time the market. But most of the time, people fail to time the market. So here, if you have the courage, you can try to take advantage of these gains without having the bad days. But I mean, come on, let's play another game. Let's focus on great companies, and this is what we do in this YouTube channel. So that's it. It was just a quick video to let you know how to think about the cash management. And I will leave you with this. I recently read the letters of François Rochon from Giverny Capital, and all that I said for the past few minutes, he said it again. François Rochon says, we don't hold much cash because we don't try to time the market, and we, most importantly, we don't want to miss out of the best gains, the best days of this market. If you miss half of them, if you miss the top 5 days, you lost 10% of your portfolio. It is an opportunity cost and a stupid mistake to make. And you don't want the anxiety, the stress that goes with it. So François Rochon and Giverny Capital, they have a fund since 1993. So it's been, 30 years? Roughly 30 years. They didn't hold a lot of cash. Even in 2007, 2008, 2009, they just don't have cash. They invest in great companies. And I will say another thing. If you invest in great companies that do buybacks, you will invest in companies that take advantage of the volatility. For example, you have Williams-Sonoma, AutoZone, AutoNation, NVR, or other home builders, by the way. When the stocks are going down, they do more buybacks. So when you have 2008, 2009, these companies took advantage of the volatility and became even better in the future. they thrived in the future. So maybe a good reason, a good way to see the cash allocation is how much cash do you want? Is it 0% and you just want to ride the wave? Is it 15% and you want to try to time the market? And for the remaining part of your portfolio that is invested, maybe you want to fill your portfolio with buyback machines. So that could be a good way to take advantage of the volatility. If you expect a crash for some reason in 2025, right? If you expect the S&P 500 to go down 20% and then rebound, maybe you want to fill your portfolio with buyback cannibals, companies that are buying back their own shares, buying themselves out. So that could be really interesting, a good portfolio, and you will have great gains if you do this. I have a couple of buyback companies in my portfolio, and I don't really worry if the prices are going down, because I know that these companies will do buybacks at the good time, at a good price when they are cheap, and they will compound in the future. So that's basically it. It depends on your risk tolerance and how willing you are to give up on these huge gains. My advice and what I will continue to do in 2025 is to stay invested. We don't know how this market will react. Nothing is surprising. With this new presidency, with this new world order, we can even have a year that is up plus 15% for some reason, plus 20% for some reason. The markets can become overextended for a long period of time. The markets are not cheap right now, a little bit overvalued, and they can become even more overvalued. This is not the first time it would have happened. This is not the first time it can happen. Anything can happen. Don't think too much about the macro. Think about businesses, and your priority now for 2025 should be to do the research on great companies. Be ready in case you have a market crash for some reason. You want to be positioned really well for the future. That's it, guys. I hope this video was helpful. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.